All right, we're live. Thank you so much for joining me. You're watching. I almost said you're listening. You're watching or listening, depending on what you're doing with the show here. But money. I almost said money. What's with me today? I have so much going on in my head today. Be the boss of your money. It's a show about taking control of your money, and we're going to do that now. We help you take control of your money in so many ways. And I said something that I really liked this morning in the radio show. The path to financial success is a snooze fest. It's boring. And it should be that way. Here's exactly what I said in the radio show this morning. The path to financial success is a snooze fest. What do I mean by that? It means working, contributing to your retirement plan month in, month out. It means investing in an asset allocation plan based on how many years you have until retirement. Asset allocation plan, meaning how much money you have proportionately dedicated to stocks, bonds, and cash. And you spend less than you make. You put some money aside. You invest some. You have an emergency fund. You have savings for known expenses. The emergency funds are for unknown expenses. That's why it's an emergency fund. Savings is for known expenses, and the rest gets invested. And it's a snooze fest. Not a lot of things to do, but we make it difficult because we're human, because we're programmed to fight or flight. It's what we do best, right? So we make it complicated. We get bored. We decide we need to take a shot on something speculative that we know nothing about, like meme stocks or crypto. And to this day, every client I have who has taken a shot on crypto, including the younger ones, like the under 35 set, they really don't have a good explanation of what it even means. Well, it's the money of the future. Well, Dippin' Dots is the ice cream of the future. Whatever the money of the future. You know what the money of the future is? Money. So we take detours because we want to speed up the process, because we get bored or we fall behind. And now we're looking for that Sunday punch to really rev us ahead and just catch up with the hot stock, or if I could just get this IPO, or if I could just get the next hot thing, or this company's going to come out with a new drug and they're about to get approval. I'm not saying once in a while stock doesn't pop. I'm not discounting that. I get pitched by people all the time to look at a stock that they like. They want an opinion on it. And I basically tell them it's not really what I do. I have the stocks I follow. I understand them. I know what they do. I know about their financials. I know about what analysts expect from them. I know what I expect from them. Those are the stocks I'll talk about. But when somebody just calls me out of the blue and says, hey, can you look at the stock? It's $1, or it's some Canadian company. They might, oh, please. I have yet to see anybody make money with those things. And once in a while, somebody will hit me up and say, hey, I told you about the stock at 30 cents. It's now $8. Yeah, once in a blue moon it happens. The people who are telling me about it, these are not the people I'm taking stock advice from anyway. All right. And that's the way I roll. Okay. I've been doing this a long time. I'm not speculating with my money, and I'm not speculating with my clients' money. The stock market is speculative enough, isn't it? Buying individual stocks is more than enough speculation. But there's a difference between speculating and / gambling and investing. And when you gamble, the longer you sit at the table, the longer you gamble, the lower your odds are of winning. When you invest for the long term, when you invest, the longer you sit at the table, the higher your odds are of winning. It's probabilities. Casinos, the probability is stacked in their favor. The stock market over time is factored it's in your favor over time. It's in your favor. That's the difference. And I've got more than enough years to prove that. Past performance, of course, is no guarantee of future performance. And if we do see the stock market down and the economy down and things just aren't working, we'll have bigger problems to deal with in the stock market anyway. Because that would mean innovation as we know it has ended. It would mean corporations stop trying to be as profitable as they could. Corporations would have to stop reinvesting into new technology and new efficiencies. New types of companies and industries wouldn't be developed. We would just be stuck with the same old. And eventually, large companies, good companies, there is a tendency for these companies to eventually become more like utilities. Take a look at an IBM, for example, which has been basically dead money for decades now. And there are other stocks like that. Once in a while, there's a breakout. Once in a while, a company could reinvent itself. IBM, I know, has been trying very hard to do that. But that's just an example. Okay. We had a couple of IPOs. Oh, you know what? I have to run the intro. I don't even know why I call it an intro. I should call it a mid-tro. Okay. So let me just run this. If you don't mind, give us a thumbs up or some kind of acknowledgement that you're enjoying the show. And it'll help spread the word to your other connections and helps the algorithm go, wow, this is good stuff. People are watching. People are liking it. We need to share this. All right. That helps a lot. If you have any questions about what we're talking about, hit me up in the comments. It's the best part about doing this. I love hearing from you. Or if you just want to say hi, words of wisdom, words of encouragement, those are always really appreciated too. So here we go. I'll be right back. Then we're going to get into the market update. We're going to talk about Instacart and ARM Holdings, those two big IPOs that people were expecting would rescue the stock market. And as we called here, no, it's not the case. Here we go. All right, it's good to have you back. Be the boss of your money. We're talking about right this second, the two IPOs. Let me take it to the share screen, okay? All right, so let's take a look first at Instacart. Instacart, you've all heard of Instacart. You know, it's the company that we use to get through the pandemic, delivered all of our groceries. It was touted as a $40 billion company at one time. Now, I think we're public today with like a $9 or $10 billion valuation. So substantial haircut for all those private equity investors who've been putting money into it. Turns out the delivery business takes a massive amount of scale. You could ask Amazon, and Amazon had a longer runway than anybody. And the big cheese for Amazon, the big moneymaker, is their cloud business. So unless Instacart decides it wants to be a cloud company or an artificial intelligence company, it's just a low profit margin delivery company that people order shit for. Order stuff for on the internet. Sorry, compliance team. I'm going to have a tough time breaking that habit, but I promise I will break it. Okay. Wait, that's not it. Nope. No. I have a bleep somewhere. I have a bleep. No, it's not it. No, that's not it. Nope. I don't know. I have a bleep button somewhere on my board here, but maybe I just have to keep my finger on it. Just randomly bleep. I almost said randomly bleep out. I have to say stuff. Okay, so Instacart. Let's just take a look here. The market cap is $9.3 billion valuation. Even though it says shares outstanding 276 million, they only had a small fraction of that offered to the public. The stock went public at 30. It went to $42, 43, just about 43. Closed at 33.70 and a little bit lower at aftermarket. So 30 to 33. Not a bad move. I mean, that's over 10% move. No one could, no one's going to complain about that, but it is an IPO. You expect an IPO pop, and people are thinking, wow, IPOs are back. This is good for the market. And what we talked about last week, if you recall, that no, It just means that investment bankers are able to squeeze out one or two IPOs. These happen to be in the IPO world. These two happen to be, Arm Holdings and this one. They happen to be popular and pretty good deal. They happen to be pretty good names for IPOs. They're not so developmental stage. They've been around for a long time. So, but you can't complain. But the point is, it was as high as 43 and closed at 33. That whole pop just disappeared. I don't think that is a particularly good sign for the market. You could say it's rational and the stock market is being rational and it just knew that was too high and the stock sold off. I guess that's a good thing. But if you're looking for a sign from IPOs that says the speculative fever is back, the animal instincts, whatever, are back, this didn't give it to you. So we continue to meander along, waiting for tomorrow's Fed meeting announcement. If the Fed raised or not raised rates, 99% chance that the Fed will not raise rates, according to the Chicago Mercantile Exchange Fed Watch tool, which is very easy to look up, and you can follow that yourself. It's 27% chance that they'll raise rates in the November meeting. I didn't see what the percentage of expectations is for a rate hike in the December meeting. But including tomorrow, there's only 3 more possible chances for the Fed to raise interest rates. Okay, they could do it in between meetings, but they typically don't need to, and there's really no need for that unless there's like a sudden emergency. Like after 9/11, the Fed cut rates immediately, intra-meeting, but it was necessary. So, but rarely does the Fed do something intra-meeting. Okay, and let's take a look at ARM Holdings. Okay, look at that. 52-week low already. This company went public this week. It's already at a 52-week low. The low is 53. The stock was as high as 69. So right now it's 55 after market trading. That really just gave up its gains. And ARM Holdings is probably one of the highest quality technology companies to ever go public. And I say that as a fact that 99% of all smartphones in the world run on chipset design technology from ARM Holdings. And they've got better stuff, but they've got competition coming out. And what the company promised in terms of growth rates after they go public is quite different than what the company's historical growth rate has been. So people, investors are wondering, well, why all of a sudden is the growth rate, or why all of a sudden is management of ARM telling us that the growth rate's going to be better? They didn't tell us this a year ago. Like what's going to change so drastically? And I got to tell you, investors are not buying it and they're not believing it. And they're like, you have to show me first. And we're not going to bid up the stock based on what you say you're going to do, because it's so out of the norm for what you've been able to do in the past that we have no reason to believe you. So there is a credibility gap. That's the problem with that. Let's take a look at a couple of other things. So let's put you back on the screen. Dow off 100, Nasdaq off 32, S&P off a little. Oil was up 23 cents on the day, but it was up like $2 and change. It was like 94 and change earlier today. And the Dow is down a lot more. When oil started to give up some of that gain, the market started to recover a little bit. But this is highly inflationary. Plus, we're about to all get rate increases for our health insurance. So these are two very inflationary things. I've got somebody out there in the comments. I just want to see who it is. We have Rita. Oh, Rita, I miss you. Rita, the powers that be, and they're going to be listening to this in the morning. They're like, they're getting a little stricter. I said the SH word, and they're like, oh, you can't say that. But anyway, I miss you. Hope you're well, and hope your husband is well as well. Hope everybody's well by you. And thank you so much. You're such a good friend. So what else is going on? VIX continues to be at about 14. Nothing major. Let's take a look. Never before we've seen. This is just an article that talks about how the top 10 biggest stocks in the world, of which like 8 of them are American companies, have never had so much sway over the global stock market. That's nothing new. It always strikes me as kind of odd when I see an article that's about something that's been obvious for a long time. We've been talking about it for a long time, but nevertheless, it continues to be true. So we yesterday wanted to talk about this. General Motors and Ford, they're going through a strike. The UAW, United Auto Workers, has said if they don't see meaningful progress from management of the companies of GM, Ford, and Stellantis. Stellantis makes, they own Chrysler, Jeep Wrangler, Ram. And I think they own Fiat also. But as far as manufacturing, United States, the United Auto Workers Union says, the head of it, his last name is Fein, Fein. He says that if we don't see meaningful progress in negotiations by Friday, we're going to close even more plants. So right now, what the strike is, it's just a few plants that have closed, but they're critical plants in terms of, parts and supply chain and making some pretty popular models. So what happens is they'll gum up the system, they'll gum up manufacturing for automobiles and SUVs, and it'll make those even more expensive. I don't think that they're going to win the union. I don't think it's going to win the public relations war, because what they're going to do is they're going to have the effect of raising automobile prices on the rest of us. And what they're also going to do is they could hurt the economy. But the good news is for investors, and this is like the real rub, is that if the union strike extends a few weeks and it grows from just a few manufacturing assembly lines to a full all-out strike, where every plant in America that has anything to do with automobiles has to close down, what's going to happen is that'll have the knock-on effect of slowing the economy down, which actually makes the job for the Federal Reserve easier. Then you start to think, well, the Fed's not going to raise rates, and maybe they'll cut rates. That's considered an optimistic scenario for investors. Second of all, GM and Ford are such small companies compared to the top 10 companies that are publicly traded, for example, like Tesla, that they're so small that if these stocks went to zero, they'd have in a bubble. If these two stocks went to zero, GM and Ford, and let's say it's Stellantis, it would have very little effect, if any, on the S&P 500 index. You wouldn't even notice it. You can't invest directly into an index, but you could invest into a security that tracks or mimics an index. Just have to get that out of the way. The only thing that really counts is the top 10, 15 biggest publicly traded stocks. We talk about them all the time. Alphabet, which is Google, right? Google changed their corporate name to Alphabet, so they could say Google is just a part of Alphabet instead of saying the whole company is Google. Facebook changed their name to Meta, even though we still refer to it as Facebook. The actual name is Meta. The ticker symbol FB was dropped in favor of META. And there's Netflix, there's Amazon, of course, there's Apple, right? All right, so that's that. And lastly, let's take a look at interest rates. All right. So you see from the 2-year on down, it's all 5% plus. The 10-year is at the highest yield it's been probably in about 15 to 16 years, almost 4.4%. And, when it gets to, people are going to say things like, well, if it gets to 4.5%, that's when it'll be really bad for the stock market, for the economy. Then we'll get to 4.5%. So we say, well, the 4.75% level is the important level. Then the 5%, we don't really know. Let me get this news off. We don't really know. And I don't think, for me as an investor, being an investor, the very nature of that is not knowing. You're investing in the stock market, and you're letting time do its thing. You're investing in management of these companies who are doing everything they can to grow the company in terms of revenues, unit sales volume, earnings, and all those things. And at the end of the day, it's expected that we'll have, or the end of the decade or working career, I should say. End of the day is just an expression. I know somebody's going to say, well, you said in a day. Are we talking about day trading? Okay. Got to be so careful these days with what you say. But sometime in the future, you expect the companies stocks to go higher. All right. So that's what's going on. By the time we talk tomorrow, we'll have known what the Federal Reserve has done with its interest rates. We'll get a speech from Chairman of the Federal Reserve, Jerome Powell, of what the Fed sees, what they're going to do. And people thinking, well, if the Fed sees inflation, they'll do this. If they don't see inflation, if they think inflation will remain low. I have news for you. I have some news for you about the Federal Reserve. It is not omnipotent. It is not all-knowing. And when you hear investors, I'm talking the ones you read about, you see on TV, when they say, well, we're going to see what the Federal Reserve has to say, what the chairman, Jerome Powell, has to say in terms of what they expect for interest rates, or where they see interest rates going, or where they see inflation going, and they're going to take a look and they're going to say, oh, inflation is going to be higher. No, they don't know. They can take their best guess. Maybe their visibility is good for 3 to 6 months, and even then, that is often very questionable. And the successful investors I work with, meaning people who have saved, invested, and are prepared to retire and live the lifestyle that they plan for, that they desire. That's what I mean by success on this show. All right. They, along their financial journey, okay, the sleeping tour, okay, the boring financial journey, they didn't pay attention to interest rate hikes. They didn't pay attention to if inflation goes up or not. They didn't hang on to every single earnings announcement from every single company in the S&P 500. What they did is they just followed smart, practical, personal finance habits. The road to success is a snooze fest, and that's exactly the way it should be. That's it for today. I'm going to get going. You guys have a great rest of the day. Talk to you tomorrow.